Hey guys, welcome back to another video, and today I'm here to talk about one stock in particular that I think has amazing returns. Honestly, I think that it is the best stock you can get into right now, that has the highest risk versus reward ratio, and I think that a lot of good things could come out of this company. So if you do enjoy this video, be sure to smash the like button, also subscribe to the channel. We are at 203 subscribers. 300 is our next milestone. Thank you guys for supporting on the journey. And let's get right into it. So we can see today, we hit $24,000 in the portfolio. That's not too bad. Very happy with that. But if we check, we can see that the stock we're going to talk about today is SoFi. So this is ticker symbol SOFI, SoFi Technologies. This is a fintech company. They're actually a banking company, and they just recently hit the 2-0 mark on their stock. You can see in the past year, this company's up a lot. They're up $14 the past year, almost 200%. I've been lucky enough to be in them since $8, so I've made a pretty penny off SoFi. I don't have that much invested, but definitely reap the benefits percentage wise on the returns on SoFi. And yeah, you can see they're relatively a small company, less than $24 billion market cap. But I think this company has a lot of room to grow, and you can see that in their earnings projections. They're growing, but you can see this is available July 29th pre-market. So this is very soon. This is something that you probably want to get in before the earnings. I'd say I think their earnings are also going to mean a lot. So the past two videos I've made are all also on a strategy for earnings, and a way you can make money from that. But I do think that SoFi is, more going towards the upside after this earnings. So I wanted to check out their investor presentation for Q1 2025. There's going to be a new one coming out very soon, but I want to look at their numbers and kind of compare them to, their past years and how this company is growing so well. And the next quarter, the numbers are probably going to be even higher. So you can see their members compounding annual growth rate right here. You see CAGR. It's 52%. Their products compounding annual growth rate 54%. That's insane. Their diversified growth, you can see their guidance is they're growing at 33% year over year growth, 27% year over year growth, and they have 9% margins on their adjusted net income. So, I mean, the percentage growth, there's nothing to be worried about. Those are insanely high percentage growths. When you get into the double digits, it's high. You get into the 20s, it's very high. You get into the high 20s, there's nothing to be worried about. So we can also see their net revenue is increasing 66% year over year. Their fee-based revenue is increasing 67% year over year. You really cannot, these projections are great as long as they meet the numbers. There's literally, and I think they're projecting low, honestly. I think SoFi is going to come out and beat these numbers pretty easily. I mean, we'll see on Tuesday if they do have an earnings beat or not, but I do think that SoFi is going to come out and pretty easily beat these numbers. So that'll be interesting to see. And you can also see they are a technology company. This is a banking company, but they're also a technology company. And I've made videos about SoFi before. But the reason that I'm bullish on SoFi, I'll go over this again for people that haven't seen the other videos, but you look at a company like Wells Fargo. Let's use them as an example, which isn't a tech company. They're just a banking company. So I'd say not as valuable, but they're very well established. They have a 272 billion billion-dollar market cap, and they have 217,000 employees. They're leasing a lot of locations, and that's losing a lot of money. You have to pay out these employees. The locations that you're leasing, you're losing money on that monthly. So, let's also check out Chase Bank, JP Morgan. We have 317,000 employees and an $824 billion market cap. So these banks aren't going anywhere. But I do think that SoFi is a lot better of an option when it comes to those two banks because they don't have any physical locations and their employees are, pretty much a 20th, a 40th, a 60th of the employees that they have. So their overhead cost is very low. Their room for growth is insane for this company, and you can see their market cap is still very cheap. They're about a tenth of Wells Fargo, and a 40th of Chase there. So this is a company you want to get in right now before their next earnings. You see they're reporting on Tuesday pre-market, so that'll be interesting to see. I think that there is an earnings play for SoFi, definitely. If you buy an August 1st call, I don't hate a call on SoFi for the earnings. I think that this can make a lot of money. IV Crush will definitely hit a little bit, but not that bad. But I think the move with this is to get a leap call right after earnings when the IV Crush does hit. They're going to be cheaper. IV is going to be crushed a good amount on these options, and they're going to be a lot cheaper, I think. So I mean, that's when, that's affecting your profit, but you can see the net debit is $627.50, but I think it's going to be a lot less after that earnings. So you can see, I mean, if we have 90% range in the next 1.5 years, which I don't think is that crazy, could bring it to 125%. You could forex your money pretty easily with SoFi. So I do think that this is a really good investment to make right now. If you're going to buy an option before earnings, I don't hate that either. I think SoFi has a lot of room to run before earnings and even after earnings. Buy a contract like this, $24 call. SoFi could definitely run, I think 30%. That's not crazy after their earnings, and you see that is a good amount of money. 10xing your money. So yeah, I'd say get into that if you do want to get exposure to SoFi, and I think getting in before their earnings is very important. This company is going to take off, in my opinion. I think that it's inevitable with the stats that they have. Their price to earnings ratio is high, but this is a company that's increasing revenue and numbers at an insane rate quarter over quarter. So yeah, I hope they do make earnings. I'm pretty sure they'll beat them by a lot, and I do see great things for this company all time. It's still a relatively young company. They haven't been public for that long, and there's a lot of room to go with this company. So if you guys did enjoy this video, be sure to smash the like button. Also subscribe to the channel. That's all I have for you guys today. I'll come back with another video tomorrow. Appreciate you for watching. Catch you in the next one. Peace.